Well, now I'm delighted to continue the industry theme and introduce Mohit Rahan, who is the Group CEO of the TIW Capital Group, to continue to describe the industry experience of using the variable capital company structure.
Thank you. Greetings to everyone. Good morning and good afternoon to everyone. Next slide, please. So just to set the context, I've been in the fund management space for 23 years. TIW Capital Group, we manage 700 million US dollars of asset under advice. We are present in 10 countries, including in UK. We have fund structures in multiple jurisdictions. So I'm going to straight away talk about why we believe and we are excited about the good work that the Mauritian regulator is doing and the ecosystem is supporting, the administrators, the banking architecture in general. So to start with, while I have just two slides, I think the idea is to explain from an end use point of view how we see it given our experience of having dealt with multiple jurisdictions. We have fund structures in Singapore. We have filed a structure in DIFC in Dubai, and we do have structures in India as well. And of course, in Mauritius, we have been operating for the last 23 years. I can say across funds I've been with, including some very, very marquee sovereign funds globally from Western Hemisphere, we have seen money going back easily and flow back without any hassle, without any tax problems to investors in a very successful way. So the most important point I want to start with when anyone thinks of any jurisdiction is the approval process and the speed and the clarity. I must say, having dealt in four different jurisdictions, and some of them are extremely reputed, I must again say that why this is important is because Mr. Burun spoke about 13 days to 70 days in terms of application approval. There are certain jurisdictions without naming. We have seen almost 8 to 9 months for the process to actually consummate. Now, typically imagine if you set up teams, you incur costs, you get seniors, you get fund managers, you want to market, you've gone to the market and got distributors to agree to distribute, and then you get frustrated to see the license coming after 3 quarters. I think that's a very, very important point, and kudos to the regulator and the ecosystem to give this benefit. We have been beneficiary of it. We have multiple sub funds. We have independently funds that are close-ended. We have funds in Mauritius that are open-ended expert fund. We have a fund that is a reporting issuer. The current VCC structure we also have joint ventures in it with different partners. All of that we have been able to do because of the ease of operation and the speed of execution. So that's the first point I would, like to talk about. So now the other important thing, I think, if you look at the second point, is the ease of doing business. The ring fencing part that everyone spoke about, there is a pseudo personality that you have associated with different sub funds, but the ring fencing in Mauritius is far more powerful. You can actually have a completely independent legal personality with independent rights, independent, obviously, assets and liabilities. And as obviously, Ms. Jivulal spoke about, I really want to re-highlight that the independent boards for different sub funds. We have joint ventures in UK where we have a UK partner who has retail UK FCA license. Those who are on the call would know that it's very difficult to get a retail UK FCA license, and we have filed with the regulator of sub fund with them as a partner. So because of this unique feature, we are able to get different partners under the same VCC umbrella. We also have US investors through one of our sub funds, and we are able to issue K1 forms to these US investors through this. So in terms of different client base, we have seen 30 different countries investors we have been able to cater to. And for the last few decades, as I said, I never had a hassle of from either banking point of view or taxation point of view or ease of operation point of view. Coming to the ecosystem, I think any fund manager needs support of banking services, of the administrator, custodians, and in general the auditors, the obviously calculations of net asset value for reporting purposes. I think that's again personal view. Mauritius scores extremely well. I've lived in Singapore, and we have funds in Singapore, and I can tell you, compared to Singapore, Dubai, I have no qualms in sharing this, that the banking ecosystem is far more efficient in terms of speed. At times, in some of the jurisdictions, it takes even 3 quarters after getting approval from the regulator to open a bank account, which means the banking system and the regulatory system is not talking to each other well. You can Google yourself and read the horror stories the fund managers go through in some of these jurisdictions to get banking account, operationalization done. And in Mauritius, it is extremely sweet, very simple, and easy to do. So, as a summary on this, ring fencing of products, multiple jurisdiction joint ventures you can do through different sub funds, have different board members, differentiated strategies. You can mix open or close-ended funds. You can have private equity and listed market architectures. We have gone ahead and listed our funds even on platforms like Allfund, which allows us to actually get money through omnibus channels. Ease of doing business in terms of approval process of the regulator, the variety of choices, that's there. I also made 1 or 2 points notes when both of them were talking about for further action in few like family office is a new concept. I know it's in consideration, but it could be very sweet again to look at. And lastly, importantly, the entire ecosystem of custodian, the NAV calculator, calculation, and reporting. Next slide, please. So just as a summary, this is how we have seen, this is our experience, I would say, as a fund manager with the Mauritian, regulator and the ecosystem compared to our DIFC and our Singapore structure. I have no qualms again in saying that the approval timelines is few weeks. I mean, we just did a joint venture with someone in UK, and it hardly took us 5 to 6 weeks to operationalize that. In Singapore, it would have taken me 3 quarters, and likewise in Dubai, maybe 2 quarters. Ease of doing business, hence it's extremely high. Banking system is super supportive. Uh, Again, it takes hardly few weeks to get operationalization done. The tax efficiency is phenomenal because, as I said, I can confirm to you in my previous funds, we had at least 5 sovereign wealth funds who were invested, and they invested to the Mauritius route. And there's a large bank from Southeast Asia who's actually, instead of going with the local jurisdiction, has actually invested with us through Mauritian jurisdiction. It's very ironical. In terms of costs, it's extremely low compared to other benchmarks, and hence I believe, in nutshell, the Mauritian VCC structure is worth exploring. It's a flexible structure with extremely fast approval process, with a strong ecosystem at low cost, and with multiplicity of things that you can do as a potential fund house, whether you're small or you're large. Thank you for having patience to go through.
Mr. Alhan, thank you very much. Now we've heard some fantastic industry validation and confirmation of the tremendous position and picture there is for